Now, the question of that Stubby Jeans was just asking, I think is a relevant. How do you know if you have an adjustment or not? Well, let's just go back and look at, here's one way that I do it, right? So we know across key levels we were seeing some upward thrusts here, which were pretty strong. Long bars, the presumption is the dealer doesn't give a hoot about price. They're transacting amounts very, very rapidly, very quickly, and it's causing massive changes in the overall structure. Same thing here. Boom, 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 boom. Sell, 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 right? So whether it's dealer adjustments or whether it's just the market responding, and you can see what's happening right here. We're coming back up under to 5,900 again, coming off the closing VWAP, the earlier closing VWAP from last Tuesday, from the 31st. All right, we're pushing up aggressively. So Stubby Jeans, to your question, how do you know? I do 30-second bars just to get an idea of directionality and, get an early sense. I don't think you can get good directionality on adjustment bars by going 5-minute bars or 10-minute bars, and heaven forbid someone showed me 15 minutes once, and I don't think that gives you anything because it averages out what the bar does. You want to see a reaction. Reactions are temporal and they're quick, and so you need a fast bar. Whether you use 15, 30 minute, 2 minute, 5 minute is your perspective. I do 30 only because I do 30, right? I think it gives you good granularity and it doesn't drag my system down into the ground. This is telling us we came right up into 5,900, but you can see we only came up here and we're not really reacting. We didn't carry or follow through here, right? And this is 59.0416, looks to be the high. What I want to see here is I want to see a continuation upward. I want to see us move in the direction that the stacked bars, 30-second time frames, boom, boom, boom. I mean, this is a strong reaction back across, and this is what's important, I think, right here. We came back across what we know is a very large gamma level, right? So we came right across this put-controlled gamma level. And so that's going to be important because as time goes on, the longer we stay above this level, the more we're reacting it back into, and it becomes a supportive component. Now, remember, you still have all this overhead still above us, right? So we're not out of the woods. That's why we drew, Drunken Sailor the way we drew it. And we're still inside transitions. And if you go refresh, you can see this is telling you the top of transition for where we are right now is 59.05. So we're going to have to break out of 59.05 to even have a chance. And then guess what we get to contend with? We get to contend with another strike that is put dominated. This is why the morning analysis is so critically important, not that one, is so critically important because it shows you the structure from, kind of stepping back and just saying, what did it look like? And the delta transition we drew in at 59.25, right? Because that's that strike where we come out of this negative node, negative delta node, put-dominated delta node, into a call-dominated strike. And what we want to see is, again, we want to see the market's ability to overcome those deltas and start pushing forward. If it can, then we're likely to push upward. But we said it today. Inside DS is going to be tough, right? And I'm not playing anything in this range from 85 up to 25. And, hindsight being what it is, I should never have played 25. Didn't necessarily follow my own rules, actually. But, and you saw what the outcome of that is, exactly why that occurred. So, yeah, let's see what happens as we come up into really 15. Right? We have to come up under it. There has to be enough market pressure to overcome it. And we'll see what happens as we go into 59.15. And to your question of how do you know when Well, the longer you stay above an adjustment or the longer you stay below it, you do it, you're in it for this time. Now we come back above where the previous adjustment stopped, and now we're pulling right back down to it. So really weak behaviors in this area. I I would be very cautious of getting wrapped around the axle about adjustment bars, and I would look more at the levels. Are we overcoming those levels that we talked about earlier? And for all intents and purposes, we're smack dab in the middle of the identified transition area, and that transition area is that, and especially the one that we did this morning, it's, here's the gamma transition, which was this area, and it's ugly. It's back and forth. Here's the dex transition. It's ugly. It's back and forth, and it's got a big strike sitting right in the middle of it. Stubby jeans, I would say don't get wrapped around, because you're just market noises getting adjusted in here, and that's all it is.
Okay. Okay. Yeah. Because I see what you're talking about. I saw that you said that we're pulling back down now, and then on the 15-minute chart in SPX, we kind of had a fair value gap, and I kind of I kind of like speculate that we're always going to retest those fair value gaps and pull back down. So
Perhaps. Yeah. Yeah. Perhaps. Yeah. So hopefully that's useful.
yeah, no, definitely is.